Hey guys, and welcome back to another video of father and son investing. I'm sure all of us all over the world have been paying attention to the news and seeing all of the turmoil and conflict that has been going on in Eastern Europe. Now, especially those of us in the market right now probably have a special interest in this and have already seen some of the negative effects that it's had on the economy. So in today's video, I'm going to be talking about one sector in the stock market that I think will experience some long-term growth because of this conflict. Now keep in mind that it is long-term growth. In the short term, I do believe that the stock market is going to continue to get hit until some of this conflict gets resolved and things like sanctions can stop, because those are going to hurt both the economy and the stock market in the short term. One of the biggest factors of this long-term growth, I believe, will be this announcement right here made by President Biden.
The United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine.
Now, I want you all to pay attention to something very important on your screen right now. You just heard what he said. They're banning all imports of Russian oil. Look at what that did to oil prices on that day that he announced it. Now, obviously, you could see that even before he announced it, it was already up 7.5%, but that's because a lot of people knew that this was coming. But on this day alone, oil was up right around 8%. This doesn't have a lot to do with this video right here, but one of the other things that this proves, and something to keep in mind, is that the stock market is always going through its cycles. I remember last year when oil was something like negative $35 a barrel. People were paying other people to take their oil away, and now it's become such a hot commodity. So make sure you're having some patience and realizing that a lot of these downturns in the market are short term. Make sure you're keeping that long-term investing outlook. Now, obviously, this announcement did not go over well when it comes to the gas prices. You can see that just a month ago, we were paying around $3.50 a gallon, and now we're approaching almost $4.50 a gallon average across the country. This is just basic supply and demand economics. You have less supply as we were buying millions and millions of barrels from Russia, and the demand isn't going to drop. People still have to drive to work, especially as a lot of people start going back to work after working at home. Now, what do people do when they realize that they can't pay $4.50 a gallon? Now, this number of $4.50 a gallon is affecting millions and millions of households across America. I saw a number the other day that almost 75% of households are now living paycheck to paycheck, and that's not helped by things like gas that are a weekly expense. So what do people start to do? They start to turn to alternative options. This chart on Google Trends will show you the interest over time in a particular search term. In this case, I've searched electric vehicles. Keep in mind that President Biden announced that ban on oil on March 8th. And let's go ahead and have a look at the interest over time from the 6th through the 12th. It's at an all-time high of 100%. This does not mean that on the quarter one earning reports, we're going to see massive sales from these EV companies for a reason that we'll get to later. But one of the things that this does mean is that people are looking to potentially change the way that they've been driving their cars forever. People are stubborn and they're habit driven. However, you can see that the high gas prices are starting to force people to look towards other options. One of the things about these electric vehicles is a lot of times once people switch to EVs, they never go back. In the 2020 survey, over 90% of people reported that they are likely or very likely to purchase an EV as their next vehicle after they already have their first EV. Another thing to point out that might be obvious is the fact that a lot of people switch because of these cost savings. In this third bullet point, it says the primary economic factor for switching to an electric vehicle was inexpensive home charging, and this is only going to be furthered by these high gas prices. So, if you don't understand the sector that I'm talking about by now, we're talking about electric vehicles. This is a chart that shows the percentage of vehicles in each region that are electric over time. At this point in time, Europe and China actually have a higher percentage of electric vehicles than the United States. But keep in mind that this gas issue is also an issue in those areas. So the same concepts apply. As of right now in 2022, the only country that has over 10% EVs is China, so there is still a ton of room to grow. For example, the United States is sitting right around 5%, with a population of over 300 million. Now, the total market cap for EVs is projected to grow anywhere from 20 to about 30% leading into 2030. Now, it's not all good news from these oil prices spiking when it comes to EVs, because while it might drive more demand, it also harms their ability to obtain the materials needed to create their cars, like nickels, aluminum. All of that is more expensive to get because oil is more expensive, meaning that these companies are going to have to jack up their prices. This article says that it could be right around $1,000 per vehicle in increase when it comes to the materials. Now, Tesla has already upped their prices on their car in order to counteract this. However, one of the things to keep in mind is that demand already outweighs the production of these electric vehicles. For example, for Tesla, all of their vehicles are backordered anywhere from 2 to 3 months to almost a year. And so even if a couple people decide that they can't take the price increase of these electric vehicles, they're still going to sell out of every single car that they're able to produce. Let's go ahead and have a look at the price of some of the biggest players in the electric vehicle industry ever since the first invasion on Ukraine. Now, like I said, the oil ban was only announced on the 8th. However, a lot of people saw this coming, and so a lot of this has been priced in ever since that first day that they invaded, or maybe even a little bit before that. But Tesla is up right around 4%. I think this is likely due to the fact that, like I said, they have a lot of headwinds when it comes to production. Not only because of this increased oil, but even before that, they already had problems with producing enough to meet demand. However, they also have the tailwinds of the fact that more and more people are looking into electric vehicles. One of the more direct ways to invest when oil prices are going up and people might not want to pay it would be to invest in an electric vehicle charger company like ChargePoint. You can see that since February 23rd, they are up almost 33%. In all, for me, this is a sector that I was already invested in, dating back to around the time that the pandemic started. In the short term, I think we'll see these EV stocks drop along with all the other stocks until a lot of these problems get clarified and resolved. But in the long term, I think the tailwinds caused by these problems will pay you off heavily if you have the patience to wait. If you did go on to enjoy today's video, make sure to leave a like down below to show your support, subscribe if you don't want to miss any more of our videos, and comment down below any suggestions or questions that you have. But other than that, I'll see you in the next one.